You think you're earning $82,000 a year? You see that number on your contract and you feel a sense of security? But that number is a lie. If your paycheck hits your account and vanishes within days, you aren't bad with money. You're just a victim of a calculated financial trap. Most of us aren't just paying for rent or groceries. We are paying a massive, hidden, working tax just for the privilege of having a career. By the time we perform a forensic accounting on your life, you'll realize you aren't selling your time for $40 an hour. You're likely trading your life for less than the price of a fast food meal. Stick around, because we're about to strip away the prestige and look at the brutal math behind your office job. Let's look at Mark. Mark is a senior corporate employee earning $82,000. On paper, he's winning. In reality, he's barely breaking even. First, the obvious, taxes. Before Mark even touches a cent, the government takes their cut, shrinking that $82,000 down to roughly $60,000. But that's just the surface. Now, let's look at the occupational operating expenses. Mark spends 70 minutes every day stuck in a metal box on the highway, between gas, insurance, and the aggressive depreciation of his car. He's burning $8,000 a year just to transport his body to the place where he earns the money to pay for the car. It's a closed loop of insanity. Then, there's the convenience tax. Because Mark spends 11 hours a day either working or commuting, he has zero BO capacity left to cook. Those $15 rush lunches and the $6 latte he buys to survive a 2 p.m. meeting aren't luxuries. They are fuel costs for a human machine that's running on empty. And finally, the most insidious one, decompression spending. The expensive whiskey on Friday nights, the mindless Amazon shopping at midnight, the retail therapy stories aren't choices. They are subconscious attempts to buy back the happiness that the office drained out of him during the week. When you add it all up, Mark's $82,000 hasn't just dwindled. It has collapsed. But the worst part? We haven't even factored in his most expensive asset yet, his time. Alright, we have established the brutal truth about your cash flow. After stripping away taxes and the mandatory occupational operating expenses required just to keep your seat at the office, that shiny $82,000 salary effectively dissolves into about $45,000 of real purchasing power. That is a painful number. But trust me, we are only halfway through this autopsy now. We have to look at the denominator of the equation. Your time hard and your employment contract claim you work 40 hours a week. That is the single biggest lie in the corporate world. If you believe that number, you are volunteering your time for free without even realizing it. Let's look at the reality. The company clock doesn't start running when you badge in at 9 a.m. It starts the exact second your alarm screams at 6:30 a.m. The time you spend showering, shaving, ironing a stiff shirt, and mentally bracing yourself to deal with your boss. That isn't personal time. That is production prep time. You are grooming the product to is you to be sold to your employer. Then comes the commute, 70 minutes a day, fighting gridlock, inhaling exhaust. You are doing that for leisure. You are doing it because the job requires your physical presence. That is unpaid labor. And what about after work? That hour you spend lying paralyzed on the couch, doom scrolling on your phone just to get your brain to stop buzzing. That is recovery time. If the job didn't drain you, you could use that hour to play with your kids, read a book, or hit the gym, but you can't. The job has already claimed that energy too. When you add up all this shadow work, you aren't selling them 40 hours a week. You are donating 55, maybe 60 hours every single week. That is nearly 3,000 hours a year. Now, let's do the final calculation. The math that should make you angry. Take that real net income of $45,000 we found in previous part and divide it by the 3,000 real hours you're actually burning. What is the result? $15. You heard that right? Your real hourly wage is $15 an hour. You are carrying the liability of a professional, the pressure of a manager, and the risk of burnout every single day, all to earn the same hourly rate as the teenager flipping burgers at the fast food joint down the street. The only difference? That kid can leave his stress at the fry station when he clocks out. You take the work home with you, into your dinner, into your sleep, and into your 3 a.m. anxiety attacks. You are selling your most finite asset at a wholesale discount, all while clinging to the illusion that you are middle class. But I know exactly what you are thinking right now. You're thinking the only way out is up. You're telling yourself, if I just get that promotion, if I can just hit $100,000, the math will finally work. Wrong. What if I told you that a promotion might actually be the final nail in your financial coffin? Let's look at why climbing the ladder is actually a trap designed to keep you broke. Here's the most dangerous illusion in the corporate playbook: the idea that more income equals more wealth. Let's fast forward Mark's life. He grinds for 3 years, destroys his sleep schedule, and finally lands that director title. He is now making $120,000 a year. He has made it. But if we look at the P&L, profit and loss statement of his life, the margins haven't improved. In fact, they have collapsed. Welcome to the law of diminishing returns. In economics, this means that after a certain point, every extra unit of effort yields less result. In your career, it means every extra dollar of salary comes with an exponentially higher occupational tax. To maintain the image of a director, Mark can't drive his old Honda anymore. He leases a luxury SUV, not because he loves cars, but because he needs to project success to clients. That's a $700 monthly liability added to the balance sheet. He works later now, so he hires a cleaner. He sends his dry cleaning out. He uprows his wardrobe. And because his stress levels are now redlining, his decompression spending skyrockets. The Friday night whiskey becomes a nightly habit. The annual vacation becomes a luxury resort stay because he is too exhausted to plan a trip himself. He is processing more revenue through his bank account. Yes, but his overhead has exploded. This is what we call golden handcuffs. Let's compare two scenarios. Zenoria, you make $120,000, but you live in a high-cost city, work 60 hours a week, and spend $90,000 a year just to maintain the lifestyle required to keep the job. Your profit margin is thin, and your solvency is fragile. One missed paycheck, and the whole house of cards falls. Scenario B, you make $70,000. You work a strict 40 hours. You cook your own meals. You drive a paid-off car. You spend $40,000 a year on paper. Serie A looks like success. But in reality, Serie B has a higher life margin. The person in Serie B is free. The person in Serie A is an indentured servant with a nicer office view. Mark isn't building wealth. He is just running a larger, more inefficient business that requires constant cash injections just to stay afloat. And this inefficiency doesn't just hurt him today. It is silently eating his future alive. Because while Mark is busy paying for his director lifestyle, he is missing out on the most powerful financial force in the universe. And that is where the real tragedy begins. If the occupational operating expenses we discussed earlier are the wounds, then opportunity cost is the infection that eventually kills the patient. Most people look at a $50 dinner or a $100 retail therapy session and think, well, I lost $150. That is beginner math. That is linear thinking. In the world of wealth, we think exponentially. When Mark spends that money to numb the pain of his job, he isn't just spending cash. He is cannibalizing his own capital. There is an old farming term for this: eating your seed corn. If a farmer gets hungry and eats the seeds he was supposed to plant for next year's harvest, he doesn't just lose a meal. He loses the entire future crop. He starves next winter to feel full tonight. Let's look at the forensic data. Remember that decompression spending Mark does. The takeout, the drinks, the gadgets, the convenience fees. Let's conservatively estimate they cost him $600 a month. That is $7,200 a year. It doesn't feel like a life-changing amount, right? It feels like the cost of doing business. But if Mark had that life margin back, he wasn't too exhausted to cook, too stressed to think, and he invested that $600 a month into a standard index fund returning 8% annually. Do you know what that looks like in 25 years? It isn't $180,000. It is over $500,000. Let that sink in. Mark isn't paying $15 for a sad desk salad. He is paying $500,000 of his future freedom for the convenience of not having to pack a lunch. He is stripping assets from his future self to pay for the maintenance of his current, exhausted self. He is trading a decade of early retirement for a few moments of temporary relief today. This is why high-income earners stay broke. They are running on a hamster wheel that spins faster every year, unaware that the energy they are wasting could have built an engine to set them free. You are burning the fuel that was supposed to launch your escape rocket. It feels hopeless, doesn't it? The system is rigged to extract every ounce of value from you and leave you with nothing but a leased car and a stress ulcer. But here is the good news. Once you see the math, you can hack the equation. You can stop running the business of you, Inc. at a loss and turn it into a profit machine. It doesn't require a lottery win. It requires a strategic turnaround. Let's talk about how to stop the bleeding and build your exit strategy. So, how do we fix this? How do we stop the bleeding? You don't need a budget app and you don't need a side hustle that burns you out even faster. You need to treat your life like a failing corporation that just hired a ruthless turnaround sale, and that sale is you. The first step in any corporate restructuring is to stop obsessing over revenue, your salary, and start obsessing over margin, what you actually keep. In business, a company with $10 million in revenue but $9.9 million in expenses is worthless. It is fragile. It is one bad month away from bankruptcy. But a company making $1 million with $200,000 in expenses, that is a fortress. You need to build a fortress. This starts with a ruthless audit of your operating expenses. We aren't talking about cutting Netflix. We are talking about the structural costs that keep you enslaved. Look at your commute. Is that 70-minute drive worth the cheaper rent in the suburbs? If you move closer to work, your rent might go up by $400. But if you sell the second car, eliminate the gas, and reclaim 10 hours of boy capacity a week, your life margin explodes. You just bought back 500 hours of your life a year. Look at your convenience tax. You don't order takeout because you are hungry. You order it because you are disorganized. Systemize your life. Meal prepping on Sunday isn't a chore. It is supply chain management. It is lowering your cost of goods sold so you don't get price gouged by Uber Eats. On a Tuesday night, negotiate. If you can work from home 2 days a week, you haven't just saved gas. You have eliminated the need for dry cleaning, reduced the production prep time of getting dressed, and cut your stress overhead by 40%. You just gave yourself a massive raise without the company paying you a dime more. When you execute these cuts, something magical happens. You create the gap. The gap is the distance between your income and your cost of survival. Right now, your gap is zero. That is why you feel trapped. That is why you are terrified of your boss. But as you widen that gap, you aren't just saving money. You are accumulating you money. When you have 6 months of expenses sitting in a high-yield savings account because you stop bleeding cash, your posture changes. You walk differently. You don't say yes to unreasonable deadlines out of fear. You negotiate from a position of power because you are no longer desperate. You stop being an indentured servant dependent on the next deposit, and you become a free agent trading value for money. This isn't about deprivation. It is about efficiency. It is about deciding that your freedom is more valuable than the appearance of success. You have audited the books. You have seen the fraud. You have the strategy to fix it. Now there's only one thing left to do. We need to rewrite the definition of success permanently. We need to burn the old scorecard for your entire adult life. You've been taught to measure your worth by a single number, your gross annual salary. But as we have proven today, that number is a vanity metric. It is an illusion designed to keep you on the hamster wheel. The system relies on you being too exhausted to do the math. It relies on you being a passive consumer of your own life, buying things you don't need to tolerate a job that is slowly eating your soul. But now, you have seen the audit. You know the truth? Real wealth isn't about making $200,000 a year and spending $195,000 to sustain it. Real wealth is margin. Real wealth is the gap between your income and your ego. It is time to stop asking, how much does this job pay? And start asking, what is the return on investment, ROI, on my life? If a job pays you 6 figures but demands your health, your sanity, and your future freedom in exchange, that is not a high-paying job. That is a bad trade. That is a failed business model. Changing this isn't easy. It requires the courage to look different from your peers. It requires the discipline to say no to the expensive lunch so you can say yes to early retirement. It requires you to be the ruthless CEO of your own existence, but you can do it. The math is on your side. If this video forced you to look at your paycheck differently, do not keep it to yourself. Share this with a coworker who looks tired. Share it with a friend who is chasing a promotion that might destroy them. We are all in this trap together, but we can math our way out of it together. And if you want to continue this audit, you want to uncover more hidden costs in your life and learn the strategies to reclaim your freedom, hit that subscribe button. Stop paying the survival tax. Start building your margin. I'll see you in the next audit.